and welcome to the EisnerAmper Engaging Alternatives podcast series. I'm your host, Elana Margulies-Snyderman, and with me today is Jose Torres Monllor, founder and managing partner of Monllor Capital Partners, a Puerto Rico Opportunity Zone fund that invests in renewable energy, environmentally sustainable businesses, and infrastructure. Today, Jose will share with us his outlook for his investment strategy, including the greatest opportunities, challenges, how the One Big Beautiful Bill has impacted opportunity zones on the island, and more. Before we dive into the conversation with Jose, don't forget to hit that like button and subscribe to EisnerAmper wherever you listen to your podcasts. And you can also find us on YouTube at EisnerAmper. Jose, thank you so much for being with me today.
Elana, thank you for having me.
Absolutely, Jose. So to kick off the conversation, tell us a little about yourself and how you got to where you are today.
I'll give you a quick background. I'm originally from Ponce, Puerto Rico, but early on, I went to boarding school in the United States. Ended up also going to college and at Colorado College in Colorado Springs, then grad school in Arizona at Thunderbird, and then kind of continue my career also abroad. I have been very lucky and blessed that I've been working for some great companies in great locations. Really started my career at ING Barings, an investment bank. We did that in Santiago, Chile, where I spent 4 years, then moved with them to New York City, another 3 years there, and worked then for French bank, Société Générale, and then moved to Colorado to CoBank. Basically 13 years in investment banking. And at that time, I was approached by a private equity firm that had an office in San Francisco, which was one of the clients that I supported, and I was offered the opportunity to get into private equity and spent 13 years in San Francisco, where at the end I was the managing partner running the San Francisco office for the private equity infrastructure group at Ares Mutual.
At EisnerAmper, we are creative problem solvers that take a 360-degree approach focusing on you. We're an award-winning firm with decades of experience. EisnerAmper, let's get you ready.
Jose, given your focus on impact investing in Puerto Rico opportunity zones, I would love to hear your high-level outlook for the space.
One of the things that happened in my career was that I learned about opportunity zones when the legislation was passed at the end. That came from the Tax and Jobs Act. And when that happened, I saw that Puerto Rico was going to have the opportunity to allow all of the eligible opportunity zones to be part of the program. That basically was all of Puerto Rico. I took that as a possibility of looking at going on my own and establishing a qualified opportunity fund in Puerto Rico. So to do that, I established Monllor Capital Partners as an alternative asset management firm. Basically, is the general partner of the Puerto Rico Opportunity Zone Fund. Did that in early 2019, and it took about 2 years before we really made our first investment and had all of the legal and regulatory work done to basically do what I believe to this day was the first qualified opportunity fund focusing on Puerto Rico. At that time, Puerto Rico had suffered a couple of natural disasters. Basically, 2017, Hurricane Maria, some of the population was without power for over 12 months. So there was also a significant need for infrastructure and renewable energy on the island. So that was the basis for going on my own, establishing Monllor Capital Partners. And we're not just there to raise capital and invest, but really there to attract other investors and facilitate people coming to Puerto Rico and investing into the future of Puerto Rico. Puerto Rico is a significant large economy, $110+ billion of GDP. There's over 3 million people living on the island. But Puerto Rico does not have a very well-developed private equity market. We do have private credit. There's a lot of companies that are in the private credit business. But when you look at private equity, there's a void there. So part of our focus on not only a qualified opportunity fund, but just private equity in general, was really to try to get this sector to grow, to try to bring more private equity to Puerto Rico. So in addition to the Puerto Rico Opportunity Zone Fund, which is a qualified opportunity fund, we also put together a local private equity fund called MASCA. And what that allows is for Puerto Ricans that do not have capital gains to be able to participate and get tax incentives from the local tax jurisdiction. One of the complications or differences of investing in Puerto Rico is that Puerto Rico is a separate tax jurisdiction than the U.S. So what Puerto Rico did is adopted the U.S. legislation of opportunity zones and adopted it into its own tax code. But it asked that for Puerto Ricans to be able to get the opportunity zones tax benefits, that the opportunity zone fund only invests in Puerto Rico. So that's one of the reasons why our fund is only investing in Puerto Rico, because we wanted to be able to offer it to Puerto Rican investors.
And Jose, more specifically, what are some of the greatest opportunities you see in your investment space and why?
So right now, our focus, in addition to renewable energy, Puerto Rico's energy infrastructure is very dated. Is mostly based out of fossil fuel, and a lot of them are not even EPA compliant. So there is a need to transition. Maybe there's a mandate to be 100% renewable, but even if we get to 25 or 30% renewable, you're talking billions and billions of dollars that will be needed to be invested in renewable energy. So that's a sector that we're focused on. Infrastructure in general, roads, bridges, water, although a lot of it is under public hands, there's incremental investment that's needed, and they're starting to look for the private sector to get into that space. Housing is another one, not just low-income housing, but housing for the middle class. It's something that is trying to get going. There's a lot of old homes and infrastructure that cannot be simply improved. You actually need to do some new construction as well. And finally, the other sector that is very interesting in Puerto Rico is tourism. Puerto Rico, from its location in the Caribbean, if you look at all of our partners around and islands around Puerto Rico, the tourism industry represents a significant amount of their economy. In Puerto Rico, it's a very small percentage. A lot of it has to do with the infrastructure. The amount of hotel rooms in Puerto Rico compared to the islands around the Caribbean is very low on a per capita basis. And finally, Puerto Rico has a very attractive tax incentive program called Act 60. Under that, there is tax benefits and incentives for everything from renewable energy to tourism and even for real estate. And what we try to do at Monllor Capital and with the Opportunity Zone Fund is really take all of those together to make some of these projects viable right now with construction costs where they are. The ability to put the Opportunity Zone program together with the Puerto Rico Act 60 incentives gives us the ability to not only invest, but try to also provide attractive after-tax return for our investors.
Jose, on the other hand, what are some of the greatest challenges you face in your space and why?
I would say from a challenges perspective, I would put it into two. Opportunity Zone Funds has some restrictions, probably some of the most meaningful ones that make it difficult is that the investors only have 180 days from when they realize capital gains to invest in a fund. So for an investor to be able to actually get the benefits, first they need to have capital gains. Second, they will need to invest them within 180 days. So that's a challenge because most people don't realize when they generate their capital gains until they pay their taxes in April. So that might be too late to be able to take advantage of this program. The other thing is that the fund itself has 180 days to be able to make the investment. Well, that also creates a challenge, so you need to have enough deal flow available so that you can deploy the capital as you receive the capital. I would say the other challenge is that this was a program that was kind of a temporary program for 10 years. So a lot of not only investors, but wealth managers and advisors did not put in the time to learn it because they thought that it was not worth it. Now that has changed, and we can talk about that a little bit later, but now this is going to be a permanent part of the U.S. tax code. So I think a lot of people will actually start spending the time to get familiar with the program and making it part of their investment strategy.
Jose, that segues nicely into the following question I have for you about the One Big Beautiful Bill and how that is impacting opportunity zones such as the places you're focused on.
Well, I think I would say there's a lot of impacts about that bill. Specifically to opportunity zone, the most beneficial one is that it creates a new program that will be permanent. And now there's not a cliff where people will say, oh, I spent all this time and effort in learning about a program that will end. So that will get clarity. It will become kind of a standard tax advantage program that people could take a look at for long-term financial strategy and planning. So I think that's the biggest benefit. For Puerto Rico, it does have one potential negative side effect that Puerto Rico had an exemption where it could allow all of its census tracts to be part of the program. Now, Puerto Rico will be like all the other states where it's limited to only 25% of the eligible census tracts. So Puerto Rico will go from being a location where almost all of it is eligible to one where about 25% will be eligible like other states. So that's it's going to represent a challenge in terms of, one, how do you designate those 25% of the census tract? Other states have already done that. Puerto Rico hasn't done that yet. So they'll have to go through that process for the first time. I would say that that's kind of the direct impact. It also provides one new benefit, that is they're trying to focus more on the rural aspect and locations, and it's providing incremental incentives. And because a lot of the areas in Puerto Rico will qualify for rural, there might be a way to actually turn that potential negative of only having 25% of the census tracts eligibility to actually make most of them be in areas where they could get the extra tax incentives.
Jose, we've covered a lot of ground today and wanted to see if there are any final thoughts you would like to share with us.
Well, obviously, as you can see, I'm very passionate, not just about opportunity zones, but just general private equity and Puerto Rico. We are very excited. We're very well positioned after being deploying capital from our first opportunity zone fund in Puerto Rico for the last 4 years to now raising Fund 2, which will allow us to take advantage of the remaining 2 years where all of Puerto Rico, pretty much 95%, qualifies as an opportunity zone fund. So we will welcome investors to call us and to learn more about not just us, but about Puerto Rico and opportunity zone funds in general.
Jose, I want to thank you so much for sharing your perspective with our listeners.
Elana, thank you very much, and it was a pleasure being here.
And thank you for listening to the EisnerAmper podcast series. Visit EisnerAmper.com for more information on this and a host of other topics. And join us for our next EisnerAmper podcast when we get down to business.